everybody, it's Chris here from Serene with the 4 majors analysis update for the 19th of March 2012. Okay, just going to be starting with looking at the 4 majors, starting with the Euro against US dollar on our 4 weekly CTC strategy template. Weekly top left, working way to our hourly intraday. So weekly, daily, 4 hour, and the hourly. So where did end of last week actually leave us? Well, pretty much in a consolidative range. Very, very interesting. A number of months back we had a slight support, a lot of indecision support through here, and as it stands at the moment now, well, pretty much ranging. If you look at a weekly chart, it looks quite, we had a lot of upside movement followed by a lot of indecision, then followed by further upside movement, and that was pretty much taken back from the market, bearish engulfing, and then we went back into this price support. And end of week last, a lot of action on Friday, which pretty much took price all the way back up again. We were looking for price to actually continue to fall, but news came out that favored a rally against the US dollar pairs, and sure enough, we saw the euro close very strongly on the daily. CTC on our weekly time frame still remains negative, but if we go into our daily chart, you can see that we've come from highs, and pretty much swinging lower on the major trend above us. And you can see, let me just get this trend line in, there we go. We've been consolidating sideways. We've come back to points along here and tested price support and resistance on a number of occasions. In particular, a lot of hesitation here, 310, 335, the 300, 1300, quite a significant support and resistance level on a lot of people's minds. And we saw price on Thursday hesitating, almost a bullish engulfing at a potential support. The thing to concern about that, before that we had a definite body support being formed at the same level. Look at this. If you look at it, roughly around the 1307, 1310 mark, definite support through this period here, and yet again leading up to last week. And then we had a breach of it on Wednesday. We hadn't closed below the prior support through here at 1300, and then on Thursday we had this bullish engulfing. Well, just engulfed the prior candle, still below all the moving averages. And as things stood, lower swings here, especially this candle over here, swinging lower, dictating that the minor trend was looking favorable downside as long as we had a breach of this and a continuation lower. That failed to occur because on Friday, leading through Asian session right through to the close of the US session on Friday night, we saw the euro gaining strength against the US dollar, and in doing so, breaking back up above this previous support area and closing above the prior swing low here. Support, and then a bearish engulfing, so this formed a lower swing, and in doing so breaking this intermediate downtrend. Okay, so as it stands at the moment now, if we can see price moving higher, then ultimately this prior high or resistance higher at 13,300 could potentially be back on again for this week. So we want to see price, if that's going to be the case, then we want to see price finding support intraday, today in particular, and then bouncing on that. It's testing the 20 period moving as we speak. Okay, if we can stay above these highs, then ultimately we could see potentially this area here where we have price support, which goes back a number of months, as potentially our next target. For that to happen, we need to get above the institution moving average. Excuse this bad day to tick here. This candle that's sitting in the middle of nowhere. As I mentioned on the daily, we want to get above 1320, 200 in particular. If that's going to be the case, then we'll definitely be having to trade above not only that, but the institution moving average, which is definitely in play as we speak. A lot of indecision going into the Asian session last night. You can quite clearly see we're trading below that range. So ideally, if we can get above the 13,200 with a nice bullish engulfing, that will definitely signal that price action is looking favorable topside. Intermediate trend you can quite clearly see has been breached, and as things stand at the moment now, this was the low of the start of the trend to this little pause, the pullback, and then the extension higher. You can see that 100% has been breached. 161 would take it above 13,200. Get above that, bullish engulfing would definitely signal that we should be looking for these highs, and ultimately targets way up here, just below the 13,500 mark for the remainder of the week. Hourly candle for the Euro-US dollar intraday, you can see quite everything's in my favor. CTC is in my favor, yet, however, we have a red candle telling me to heads up. It's primarily because the 13,200 is right above us as a resistance level, and if I put that in, there we go, and just zoom out, you can quite clearly see we've had a lot of hesitation on this end. Now we're trading above the smaller time frame candles, intraday candles, moving averages, apologies, and the intermediate trend or the intraday trend has been breached. Okay, then we found support, then we bounced higher. So as it stands at the moment now, as I plotted on, we could see that the initial start of this trend way down here, the support, right through to the pull back to there, 100% has been breached and it's trading above the upper end of that, but we have the major resistance level above 13,200 in place. The 161.8 would definitely be somewhere where we need to be trading above. So a nice bullish engulfing above this range going into the US session today would definitely bode well. Currently trading above all the moving averages. A lot of indecision on the hourlies since the start of the Asian session. However, the CTC on our side remains blue. RSI is above 50, and we are trading above all the moving averages as we speak. However, 12,200 would need to be breached sometime between this morning and this afternoon to see any further progression for the remainder of the week. Moving on to sterling, good old cable. Let's have a look and see what's happening in the weekly. Yeah, same here again. Late charge on the US session has seen sterling actually engulf the bearish outlook of the previous week, and in doing so, it looks like we might potentially be seeing price heading or retesting those highs that we saw of the shooting star. Clearly, yeah, testing that 50 period moving average on the weekly loss and bouncing high, and now trading well above the 23.6. If you can find support above the 23.6, then we should see price heading back up to the 50 period moving average, and as well as the institution moving average quite soon. So if it stays above or maintains itself above 15,800 on the daily and intraday charts, then that could bode well for further sentiment to creep in, or bullish sentiment to creep in, and to steady the ship to the upside. So let's have a look. On the weekly, you can quite clearly see that we have gone positive. So we have blue, blue, blue across the board. However, that institution moving average still acts as a very strong resistance level. We do need to see price running above that, and in doing so, would potentially be testing those or breaking, closing higher than institution moving average. If we go to the daily scenario, you can see that 5,900, that very strong resistance level, still above us. Okay, and you can quite clearly see the daily candle for Friday. A lot of momentum to the upside, trading straight into the institution moving average. That still acts as resistance level. You can quite clearly, it happened before in October, November of last year. It happened again this year in February, late Feb, and going into March as a resistance level. So we do need to see that breached, and in doing so, it'll definitely take us above the actual institution moving average and 5,900 in particular. So as it stands now, you can quite clearly see on the daily, we saw price last night headbutting those highs here at the 15,900 mark. Sorry, 8,500 mark. Apologies, 1586 in particular. CTC remains blue across the board. Today's candle has a blue on it, so this arrow here won't count until this candle closes on the daily. So we've got to wait for the daily close in order to get a genuine buying signal. On the 4 hour, you can quite clearly see that we're trading above all the moving averages, and we are in a consolidative upside trading range as we speak. Notice that on this time frame, there's at 15,600 I mentioned, which is quite a strong resistance level, which also happens to be the institution moving average on our daily. So getting above that will definitely start a definite onset for further bullish sentiment. As you can quite clearly see, we are trading at resistance levels. Now, above that, we'll definitely should be looking at 15,900 as our next potential target as we head higher. Get above those areas, or 15,900 in particular, which happens to be the overall very strong support and resistance level on our daily, it bodes well for further sentiment to be upside for the remainder of this week. So as you can see, we want to try and see if price will give us those indications of upside movements. At the moment now, we are trading into a resistance level. Get above that, at least 5900 will definitely be our target intraday. Get above that, then the weekly target will definitely be here at 59,900 for the foreseeable future. My trigger hour, hourly candle, 1586. You can see there's hesitation at this level, and it also happens to be the daily resistance level with its institution moving average. So I'll definitely put that in, okay, because we definitely be trading above it. You can see there's a lot of consolidation after the move on Friday. That's literally come into play. It's holding price from moving any higher. However, trading above all the moving averages. My RSI as well have extended above the RSI or 50% line. My CTC, my very important CTC, is also blue. So everything's looking good for further extensions. However, I do need to see 1586 being breached and closed bullishly in order for me to even look at the outcome at 5900 being retested for this week. So got to see 1586 breached on a nice hourly bullish engulfing at least. Price to keep finding support above 1586. That will bode well for further extensions to the upside for the remainder of the week. On to the US dollar Swiss franc. Good old Swissy. Let's have a look and see what happened on the weekly. Here again, saw momentum on the US dollar really rallying or finding some momentum to the upside for most of the week, and then we were brought back to reality as all that gain pretty much turned to nothing, and we saw price revert to the downside. Very bearish candle. A lot of selling happening at the end of the close of play on US dollar, and that happening at a very significant pivot area. You can see quite a lot of hesitation in this range. I'd ideally like to be trading on either side of that, so you can either cap it and definitely look for a definite close above this area, or lower than that to definitely give you confirmation of potential movement. As it stands at the moment now, 20 period moving average still trading below above the two smaller time frame moving averages, but the institution moving average still in play above price. So we're still very much in a negative trend. We have been for this pair for quite some time. We have seen a major attempt to get back to positiveness, but as it stands at the moment now, also very hesitant or consolidative after Friday's close. So let's have a look at the Friday session. Yeah, you can see Thursday bearish engulfing, and Friday pretty much taking it lower. We were looking to find support building on those breakouts that we saw recently. That didn't materialize. We went into a consolidated pattern through late Jan, early Feb. We saw a break to the downside. That failed to materialize or to continue any lower. We saw a nice support, bullish engulfing, and then we saw a reattempt of these price supports. That broke straight above, and then went into consolidation range, further bearishness, bullishness. Very indecisive. You can see this. Not really giving us a definite sentiment move. And the lower swing here being breached, and then we saw upside momentum gaining. This bullish engulfing here pretty much forming another upswing, and we wanted to see price moving on that. However, that failed to materialize. But by this stage over here, when we saw this bullish breakout here above prior resistance, everything was looking long. And then on Thursday we had this bearish engulfing candle, and since then Friday just closed lower. So this has actually formed a tweezer top and brought price back to the bottom side, to the downside. This tweezer top coming at prior support and resistance level at 19,300, and now it looks pretty much bearish sentiments creeping in. So we're getting a bit of topsy-turviness as other factors come in now to unstabilize or to rock the boat for the US dollar. So as it stands at the moment now, we are trading. We've breached this intermediate trend, trading below all the moving averages, testing that. Well, when I say the intraday moving averages or smaller time moving average at 20 and 50. If we fail to see price actually finding a bit of support, you can see the trading range intraday very, very, very small since the Asian Open. That's because the institution moving average below it. So if this is to remain bearish, then we do need to see the 915 area being breached, This is clearly an intraday support and resistance level. You can quite clearly see a lot of resistance or hesitation at this area. Ideally, got to be breaking below the institution moving average, because that will tell us that there's negative sentiment, and that will just bode for pretty much tell us that we should be looking for further downside movement or bearish sentiment to creep in, as people prefer to actually short this than to actually go long. Lower swings over here. If you took the high of this, I think we have 100% extension of this initial move. This was the initial move. We had the pullback, and then we had a continuation lower. 100% will take us above the institution moving average, but we need to break this area. So we get below 100% extension here at 90. What's this? 91.10 or 12. Then we're looking for bearish sentiment for the remainder of this week, or bearish setup for the remainder of the week. Put it that way. And quite clearly look at those areas here. The next potential target would be here at 908, then 161.8 extension, and then ultimately way down here at the support just below the 895 mark. So if we do get a break of this very strong support area here at 915 or the institution moving average, need a nice bearish engulfing here, close roughly around the 91.20 mark, will definitely signal that we should be looking for downside as we get lower swings, and that should in turn push price lower. So don't make any rash decisions, rather wait for a bearish engulfing here to take us below the 91.20 mark on this pair, and once we get that, it'll just give us an idea of where price is likely to go to for the remainder of the week. We don't want to be trading into very strong support, or taking a trade to the downside at a very strong support. So rather wait for a break of that support, and we can actually trade it lower for the remainder of the week. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. We've seen so much movement on this for the last month or so, breaking every price support, resistance level that we've had for some time now. Bouncing off the 75.50 and rallying, and doing so breaking above 7,800, which happened to be a very strong prior resistance level for quite some time through August, September, October, November, December, January, February, March, or February of this year in particular, and in doing so really rallying to 80, which happened to be a very strong prior support and resistance level that we saw through most of 2011, and heading higher, in fact, really rallying and almost coming in close proximity to or testing prior resistance at a very significant level at 8,400, and since then pulling back. CTC still remaining red on the weekly. However, the sentiment, we've got two parts of our 4-part CTC rule, and if we get above 8,400, the sooner we get above 8,400, then we're definitely going to start seeing things boding well for the foreseeable future for this pair. If you just look at the daily chart, you can see that very well extended to the upside. A lot of movement, and we've started to see hesitation, two spinning tops after this movement to the upside here. Hesitation at 8,400. This is a ceiling level that we saw on the weekly chart going back a number of months, and that needs to be breached to see any further extensions higher. So psychologically, for this week, that'll be our ceiling level. Need to see price trading above that, and if it fails to be trading above that, then we should be looking for consolidation and look at prior support and resistance levels. Clearly, one year at 82.50 would definitely be a price support and resistance level. Lack of price where price could be heading to. This was the start of the initial trend, pullback, and 100% has been reached. So anybody who actually bought into this would have looked at potentially 8,400 as our ceiling level, which happens to coincide with our weekly highs, and we've seen price reverting backwards. As it stands at the moment now, you can see that 61.8 of this retracement is in play. So could that be our intraday support? Notice that price on two prior daily occasions actually tested it, but we saw price closing higher. So psychologically, could this be a nice support before we see a reattempt at 8,400? If we see a breach of that, then ideally we should be looking here at 82.50 as our first initial target, or back to the trend line as our initial target. So if you take the wicks, the depending on it, there in the trend line, would definitely be our next target for this pair. Okay, so I'm just going to draw the trend line in. There we go. All the moving averages below price on the daily, and the CTC will extend to the upside. However, we could see a pullback, and depends how much negativity we do have on the US dollar. That pullback will be deeper. If it isn't, then it'll be quite a shallow one. And if you just took the start of this trend a couple of days ago to the high, look and see where the 23.6 is. That's been breached. 38.2 is the next one that's actually holding this price up as we speak. So that coincides with the 61.8 on our fib extension of the. So this could be a very strong support here as long as price maintains above the 83. What's that? The 83.30 mark. Then we could see potentially price bouncing higher. But if we get a breach of that, then we should be looking ultimately at the 82.50 as our next potential target support for this pair. I'm just going to put that in so you can see it cycling. So break of the resistance, continuation higher, failed to break of this new resistance level here at 8400. Could see price pulling back to this level before we see a reattempt of those highs. So our intraday time frame should show you CTC well extended blue. Yes, we had some reds. That'll happen. Upside trend pullbacks. That's just standard principle and trends. Moving averages all below price. Testing as we speak. Now you can see this consolidative area here. Support coming into play yet again. There we go. At roughly the 83.20 mark. Forming lower swings, dictating the price going to a consolidative pattern as we speak. Price has to maintain above 83. So on the 50 period moving average, you see a nice bullish engulfing here, and you see price moving higher. Fantastic. If we get a bearish engulfing here on our 4-hour, breaking the 83.20 mark, then psychologically we should be looking for downside trend. As I mentioned, back to potentially the 82 mark or 82.50 mark, because we've been there before. That happened to be prior resistance. A break of that, we should see another resistance level here just below the 8200 being our next target. Break below that, we should see price reverting to at least the 80.50 mark or thereabouts, which will bring us back to the institution moving average, because we had a lot of hesitation there too. So you can see quite clearly looking for these price actions below, if and only when price trades and closes lower than 83.20. Hesitation. So this becomes a nice support area, and the 20 period moving average acting as support for this pair in the same breath. So as long as price can maintain above this area, then we're seeing a bit of a consolidation with in an upside trend, with the overall likelihood of potential bounce higher. Break of that, getting below this would tell us the sentiment is looking negative, and we should see further consolidation to the downside. So you've got to look at prior resistance levels to give you them as potential targets, and but we've got to see price breaking and closing low in this time frame to do that. That's how I put it, guys. So as it stands at the moment now, consolidation. US dollar did take a bit of a beating on Friday, and that's potentially going to set up for negativity on the US dollar for this week. But we do need to see some support and resistance levels being breached before we do see that sentiment being genuine negative sentiment for the US dollar against most of its peers. Until then, just bide your time. Wait for the market to go. It could be just pullbacks. We don't want to be going long or short and potentially a pair that's just taking a bit of a breather. So make a note of it. Other than that, keep your trading simple. Let the market dictate what price action is going to do, and then we just trade it. Wait for the big boys to come to the table, and then we'll move with them. Make sure your money management is in play, and most importantly, keep it simple. As I always keep saying, I can't say it enough. And I'll see you tomorrow morning first thing. Till then, trade serenely.